Welcome everybody to this webinar on the super cycle secrets and futures market opportunities. We've just seen a few days ago, it was on Thursday, last week, or this week, Thursday, that gold broke to a new high, all-time high, right? So that's quite some an event, but it didn't come with a surprise, right? We've been talking about that for over a year for good reasons. Well, we have got the patterns, right? And the higher time frames, and this is just a move that was expected, basically. All right, so let's come to a couple of slides to talk about. Okay, super cycle secrets and futures market opportunities. So today the focus is more on the opportunities, like the trades, right, that are based on the patterns. And I'm going to show you some, well, one thing is the long-term opportunities there are in the market that comes from the super cycle. Well, I'll show you as well, or explain what the secrets are to the super cycle, how I came up with that. And then I'm going to show you what are the long-term opportunities over the next couple of years, like which asset class and which symbol should do really well. And then what trades we took this week here in our community. It was Wednesday and Thursday, I think. Well, what trades are setting up for next week, right? Early next week, mid next week. And in the end, I'm talking about, yeah, the offer I have to make for the upcoming futures workshop. It starts Thursday next week. And there are just a few open slots with this big discounts, with this big discount available. So let's come to, well, let's start with it. This is just a quick recap. So we're looking here at the commodity index, the CRB commodity index, and that's the quarterly chart. And well, this is how a multi-bar pattern looks like, right? We've got a momentum move, and then we've got a consolidation. Well, being a quarterly chart, this is a multi-year. That's basically a 20-year consolidation, right? And what we see as well, what are the extremes? Well, the extreme is the great financial crisis, the high, 2008. This was a drop, right? And then we've got another big drop. Well, that was the corona pandemic low, March 2020. And these are the extremes, right? And it's quite interesting to see that defines the pattern. And the pattern basically tells us this is a trend continuation pattern. So that tells us this is a bullish pattern. And well, we all saw that, right? This big bar, well, this is what we call a test bar, an excitable price action event. Well, we didn't know back then, will it ever re-break? Because this was the condition for the super cycle, commodity super cycle to play out, to have this bullish decade, right, of commodity prices rising very strongly, actually, indeed. So how strong? Well, we defined the target based on the pattern and on the momentum move that leads to the pattern high. And that gives us a target which is 10 times of the prices where are today. So that's a 10-folding, right, of the index. Well, that means that some of the symbols, the commodities that are part of the index, well, they will do much better, and some others, well, they will do less than 10 times. And we know as well the time target. And the time target is 2035, and that gives us basically, right, 10, 11, 12 years to get there. So this was the first signal, and there will be more signals to come. This is the first leg, right? Whenever there's a leg, this is a momentum move, stop run move, or we're expecting a consolidation. And this is what's happening right now. We're in consolidation mode. And the second leg is going to happen soon, right? Well, we've already seen gold getting into its second leg, right? Making a new all-time high, but the index is not there yet. So this, again, this is the index, right? And now we're zooming in. This was a quarterly chart. This quarterly chart, right? Now we're zooming in. This is the weekly chart. So we're looking at this consolidation. How does that look like? And well, it looks like this, and we know the shape of it. This is an S2. That's a turtle pattern, right? A rounded shape, a saucer type of pattern. And when we had our last webinar, few weeks, like a month or so, no, that's more like 2 months ago, we've been right here at that point. And I didn't change these lines. I talked, those of you who've been in the webinar, you might remember, I talked about, well, prices should drop, right? Actually below this line. This is our midline, and it should test the angular test line, the ATL. And this is actually what happened since then, right? So these patterns, I mean, they have the, I don't know how you call it, they have this power to actually fulfill themselves quite a bit. So there was a good probability this to happen. It happened. Well, now what we need for a second leg higher to start, well, we need a rebreak of the last dominant high. This is this line, right? So we need bullishness to come in. Well, gold shows bullishness. It doesn't show in the index, meaning that a lot of other index symbols are not doing yet well. So once a rebreak happens, well, that's basically this would actually be the start of our second leg. Well, with the patterns, the market is fractal, right? And we actually had another pattern here on the weekly chart. This was an S1 here entry, and now this has morphed into an S2, from an S1 into an S2. So those that are following me, you know what I talk about. Otherwise, well, never mind. So this is another view. It basically shows a commodity index, this time the S&P commodity index versus the S&P, the US equities index, right? One divided by the other. And we've seen here over the last like 50 years, right, that today we're here. So we're at historic lows. Well, that doesn't happen that often. When we're at extremes, well, typically we would bounce back at least into the mid-range, or we would form another high. So that's basically where we are, right? At the super cycle about to unfold in the commodities. Well, that would mean that this chart is going to rise, right? And I'm not necessarily thinking that the S&P goes down, quite the opposite. I think both will go up. But in order for this chart to go up, the commodities, they would go up much more than the US equities or equities on a global scale. So we've got really fantastic opportunities for actually hard assets, not only commodities, because equities, stocks, these are hard assets as well, right? Let's have a look, or a closer look. What does it mean, a commodity super cycle? I didn't invent that, right? And what does it mean? It's Capital.com. I quite like that definition. It's an extended period of boom and bust in the commodities markets, with prices rising significantly above their long-term trends. These movements may even outlast the business cycle. So kind of irrational movements that cannot be explained, right, by the business cycle, and typically persist for well over a decade. So the last commodity super cycle we had was into 1981, when precious metals, when they hit their high, right? 81 was the high in gold and silver. I remember my father and his friends, they were speculating in precious metals, right? So most probably we're getting back to these times. Now, let's just quickly like a resume from the webinar, the last webinar I held. So what we're looking for here, the big picture we're having for the next decade is that comes out of this commodity super cycle, that all hard assets will increase in price, right? We don't differentiate all hard assets, and they should increase tremendously in price, including US equities, actually including cryptocurrencies. Although they're digital assets, well, they're kind of something, that is of value, right? Hopefully value that remains. So it includes quite a number of things. So why should they rise? Why is it because the fiat currencies are going to deteriorate, or there would be inflation? No, not well, maybe, but most importantly, it's a loss of confidence in government bonds, right? So currently we're at historic lows in interest rates. Well, if interest rates go up, we'll see governments fail, like governments, emerging market governments, and we'll get this rush of loss of confidence. And this will actually lead to the debt bubble to burst. A debt bubble doesn't burst like a US equities bubble. It goes very slowly and steadily, right? And we should see a lot of money coming out of this debt bubble, looking for a safe haven, right? Because government bonds will be perceived not being safe anymore. It's a loss of confidence. And this money, well, we'll try to find a safe harbor, but all these other, like gold is a relatively small market, while silver even smaller, crude oil, all these commodity markets are relatively small, well, actually tiny compared to the government debt bubble, which is that government debt market, which is the biggest market there is in the world, right? And as well, we should see a loss in the value, a decline in the value of the US dollar that comes from pattern research. We're going to have a look at that pattern. It should actually lose 50% of its value, the US dollar. And this is another driving force for hard assets, commodities to skyrocket, basically. So what we'll see in this environment is that price bubbles are going to pop up in different commodity asset classes at different times, right? This is for the flight for the safe harbor, but there is no safe harbor. So money will actually move around quite a bit, create a bubble. People will get scared of the bubble, well, they move it into another asset class, which will then create another bubble. This is basically the big picture we are foreseeing, and this is a trader's dream, right? I mean, I've been waiting for that for quite some time. I was expecting this to happen 20 years ago. It did not, right? And we should see that unfold. We actually have a very good blueprint, which is Palladium, and we're going to have a look at that later. Palladium six-folded, right? The spot price six-folded over a few years. Something like that we're actually foreseeing for the other asset classes. And gold might be one of the first ones to start moving. Now, this is the US dollar. Let me just bring in the chat. Okay. So this is the chart, quarterly chart of the US dollar index. That's a future. We trade that as well, the DX future. It basically means that if price goes up, the dollar gets stronger, and if it goes down, well, the dollar gets weaker. And this is, well, I've talked about that, and you can search my YouTube channel about the US dollar macro trader trap. This is the key to the super cycle secrets. This is one of the defining charts, and as well the charts to look at. As we have seen, I mean, this low, right, the US dollar low marked the high of the gold price back in 2011. This marked the high. Well, here, this marked the low in gold in 2016, and this swift up move should have actually created an even further low in gold, but it didn't happen. As the US dollar index went sideways, we see it here. This is what happened over the last couple of quarters. As it went sideways, precious metals started to rise, which is kind of interesting, because when the dollar goes down, and this is a historic correlation, when the dollar goes down, well, all commodities are basically rising, right, on average. And with this little drop here on a quarterly chart, a bearish bar, we already see gold at all-time highs. Well, just imagine if the US dollar index goes down here, what gold is doing, right? Back then, in 81, this was the all-time high in gold. Just imagine if the dollar drops, where gold will be. Well, it will be beyond $5,000, right? So this is the chart to watch. And the very important level is this level. This as well is a pattern, right? That's the S1 pattern, the gecko pattern. This is the trap that has opened up. A lot of people thought, oh, the dollar is very strong and bullish. Well, it will actually fail, right? If we see a dollar weakness, and it will re-break this line. That's what we call the baseline. And as we re-break, well, that shuts the trap, and people are trapped who thought that the dollar would rise. Well, we'll see what happens when it does. I think the commodity markets will get on fire once we re-break, because these are stop run levels. We're going to see at some of the trades we took this week and some of the longer term charts, what these stop run levels, what they can do, right? And if they come in combination with a momentum move and a pattern, they trigger a very strong follow through, well, on the downside, right? Next one. Don't see my cursor. Okay. Long-term opportunities. So we're looking at different asset classes. What asset classes give us good opportunities? Well, let's have a look here at gold and silver. These are charts from today. Monthly chart, quarterly chart, gold, silver, monthly chart, quarterly chart. And we see here how we have the patterns, right? This in gold was a pattern we identified back in July 2019. That was the first entry signal. And since then, well, we're building strength. In order to break the all-time high back in 2011, it was already broken the quarter before. And now this week, right? This week, we have broken to a new all-time high. What we have here, I've written that in one of my weekly Trader Insights about this situation. I'm just going to post that to you, to the group, about gold and the opportunity we're seeing, and that's currently like coming, right? We're right in there. That was in October 2023, talking about these stop run levels. That's a huge cluster of levels. 1, 2, 3, 4. 4 stop run levels clustering. We should see a big move, right? A big stop run move coming out of it. And we've just started to do it. Now you might wonder and ask, well, these are quarterly charts. What should I do with quarterly charts? Well, if you trade the lower time frames, let's say the 5-minute chart, the 1-minute chart, 15 or the 60, and if the quarterly chart is producing a big green bar, that gives you a lot of swing potential, right? Like your lower time frame trade can go a long way, and you can build multiple, like a huge R multiple, right? So this is basically the opportunity there is on these higher time frame charts, or as well, you can take it as an investment. Like for example, back here, I took a physical gold investment back here in July, and as well in silver that was in 21 or that was in 20, like a year later when it rebroke. This was an S1 pattern. This was an S2 pattern. This was an S1 pattern. So on these higher time frames, you can take investments, be it ETFs or physical or whatever. But we use it as well to give us swing potential for lower time frame charts. So that looks very bullish, right? As well, silver is lagging gold. Gold is already broken out. Now, again, these are stop run levels, right? This is the consolidation high, and gold should go well beyond the $55, well beyond. So let's have a look. What is the target for gold? This is the monthly chart. And well, actually, this is another pattern that has just triggered an overall pattern. What we have here is we have got patterns within patterns and patterns after patterns. Every pattern gives more energy into the system. And what we saw here is that this is a turtle pattern overall. This has triggered, and now what should come is a measured move, right? A duplication of this move we already had that marked the 2011 high. And as we do that on an exponential scale, well, we come up to the target, which is 10K in gold, right? So it should quadruple in prices from here, 10K. If you want to get a timing, well, it's always the timing, how long it took here to develop the momentum move, 10 years, right? So this is what we're looking for. Let's have a quick look at silver. So silver, very similar, right? We can project the target, and the target is actually $250, right? Hard to believe, but only breaking the consolidation high, we're already at 60, right? So that's a ×8 multiple for silver. I mean, I very well remember when we traded this move, right? These two very big green quarterly bars. And I actually run my students through the simulation bootcamp doing this simulation period, right? And you get, for example, only in 2 days, within these 2 quarters, in 2 days, you can go back and simulate yourself, 20 and 22nd of July 2020. You can make more than 150 hours, right? Trading the 5-minute chart, applying the 3 systems, more than 150 hours in 2 days. So this is the potential there is if the higher time frames are moving. Now this is copper. Let's go away from the precious metals, copper. And we can basically look at any of those commodities, they all show us potential and patterns. Now, this is copper, right? Copper on a quarterly chart. This is an S1 pattern. This is our test bar, testing activity we need. It's a condition for the trade to work. And this is the consolidation high. It's always a big stop run level, right? The consolidation high. Well, it got there, couldn't break it. Got there, couldn't break it. Well, it's getting even stronger, this stop run level. Once it breaks, and in a few months when it does, well, you might remember me talking about it will make a hell of a move, right? So we're basically looking for a move like that, big green quarterly bars. And as well, we can project the target. It's $18,000, right, for copper, and it's a multiple of 4. It's not new I'm talking about here. I'm talking about that since down here. And as we are rising in prices, the multiple goes down, right? Once we reach the target, the multiple will 0. Well, then we have to find other opportunities. But since we are not there yet, this is basically the way to go, right? This is a super cycle. We wanna trade, and we should get more opportunities, right, along the way. Now, this is US equities, hard asset as well. It's very bullish, right? This was a Corona spike bar. Everybody thought the world is going under. Well, this was a test bar, right? And it rebroke the base. I called it back then that this is actually a tradable opportunity, and it was, right? Coming out of this strong test bar, where we see these type of moves in the opposite direction. Basically, everybody's fooled, right? People are stuck on the wrong foot. Well, this is what we call the trap, the trader trap. This is another pattern, well, that was initiated by the Ukraine war. We can see that, well, it's moving, right? That was an S1, but then it morphed into an S2. I called this as well in one of the newsletters, and it's working nicely, and it's working its way through to the target of 60,000. So there's not so much in it, right, for the US equities, but going for 40 to 60, well, it's a 50% price increase as well. Right. And the US equities, they should get more and more vertical, meaning it's accelerating, right, to the upside till there's at some time an exhaustion move, and then they might come down and correct quite a bit. Now, natural gas is the last higher time frame chart we're looking at. Natural gas is actually the last symbol of those we are focusing on that has not yet moved into a bull, right? It's still in a downtrend. We had a short pattern here, so it's still moving. We're basically trying to time it when it turns around. And this super cycle, everything will go up, including natural gas, right? And once it does, well, then we've got a target of $55, and it's a 24 multiple because it has gone so low. Well, the multiple is quite high. The natural gas is a great symbol to trade because it goes, you can really nicely trade it long and short. You can see that, right? It's doing some very powerful counter trend moves at times. Actually took it this week, I think twice. I'm going to show you, and these are stop run levels now, right? SRL stop run levels. Whenever there's stop run levels, well, we're expecting stop run moves, very big bullish moves, and we want to be in there before they happen. This is the blueprint, Palladium, right? Nothing new for those that are with me for a good number of years. Back then, there was an S1 pattern. We've been at $600 for Palladium, for the price of Palladium. This was a stop run level. We came there, didn't produce much of a move, right? Consolidated right on top of that level, and then the stop run move came, and another move came, and it increased 600%, right, from down here. So that's a typical example of the bubbles we're going to see. And a bubble not only goes up, well, it goes down too. There was a 50% correction, right? So that means that buy and hold is not going to work, right? You want to know when to get out, so you need an exit algorithm, and this is all it needs, right? Where to get in, and then knowing when to get out. So let's have a look. Any questions so far on that, on these longer term charts and the potential there is? Any question? Okay. Well, let's move to this week's Let's move to this week's trades from Wednesday and I think Thursday. This is the Nasdaq. Just because the US equities are going up long term doesn't mean that we're only trading long, right? So this was an example for Nasdaq short on a 5-second chart. Let's have a quick look here. This is 5 seconds. These are the consecutive time frames. 5 second, 15 second, 1 minute, 5 minute for the 4-chart layout. And this is an S2 short pattern, the turtle pattern. Again, you might see this is a saucer type of shape, right? Short. It's in a downtrend, and well, a few other rules need to be fulfilled. And this is entry short. This is the stop. Now, where's the potential here? Who can see what the potential here is? When we want to write the trend, that is clear. But is there anything else you see apart from the trend and the low risk idea? And we've got nice support here from the moving averages. What is the big edge here on this chart? Well, it's the stop run level. Yeah, Yolanda. It's a stop run level, right? So this is the entry, and 3 time frames higher in the 5-minute chart. We've got a stop run level. These pronounced outsiders, let's call them, these are stop run levels, right? And if price gets there and breaks this one, we can expect a big red bar coming out of it. So basically, this idea is to position ourselves and then reap the potential. There is 3 time frames higher, and that gives us swing potential. This was on Wednesday, right? This was actually Holger came up with that trade idea. He's in the call, and this is what happened. Well, we are breaking, right? We're taking out the stop run level, and it produces a big red bar. It continues, right? This is the stop run move. Once the stop run move happens, well, we get a pullback and we want to get out, and this is exactly what happened here. This is a stop, and shortly thereafter there was a stop out, so that produced a 2.4 hour result. Nice example, right? Trading Nasdaq short. Now this is another trade. This is natural gas. That's a long trade, right? On a 15-second long. This is a very typical S1 pattern. And what we're looking for here, trading the futures market, is a test bar. This is a test bar, a big excitable price action event, or we call it the wow bar as well. Everybody gets basically scared, right? If you see this, people get scared. People get confused and overwhelmed. Either they exit their long positions here, they get stopped out, or they freeze, they don't know what to do, right? Well, we actually want to enter when price rebreaks. Now, I didn't see it here, but I saw it there. So there was an entry with a stop down here. A few other rules were fulfilled. For example, a touch of the 21 moving average being in a trend. And what is the big edge here? Well, again, same thing, right? 3 time frames higher. We are right here at this stop run level, right? These last highs, 3 time frames higher. We're basically betting on that to be broken, and then a price should get up to 2.32 more or less. This is what happens when that stop run occurs and it's moving, right? This is a stop run move, and let's see. Yeah, it continues, right? It goes higher, and it takes out, right, this stop run level. You see this nice green bullish bar, stop run move. Well, we have to execute our exit algorithm. Actually, we had another pattern. This was the entry, right? And we had another pattern forming a potential S1, and we're waiting for another test bar and a rebreak. Well, it never happened. And this then was a stop out up here. There would have been a scallion building a pyramid, right? And basically doubling up on the opportunity. Okay, now this is a 15-minute chart. Doesn't matter, right, which time frame. That was 15 second. Now this is 15-minute. This was from Thursday, I think. An S1 on the 15-minute. Again, we see a really good test bar followed by another test bar. This is the entry. This is the stop, right? So what we have here is, again, we've got stop run level here, and we've got a stop run level further up. This time 2 time frames higher. This was the opportunity here. And this is what it did. This is how a stop run move looks like, right? Stop run move, taking out this level. And as well here, 2 time frames higher, this level, testing this next stop run level. It didn't take it out. It tested it, right? When it takes it out, it looks different. We get a green bar. So that didn't work out. Taking out the higher time frame stop run level, well, still, it was a nice profitable trade, right? You don't always get the big winners. A row of small arm multiples, well, gives you you reach your weekly target as well. Okay. Now let's come to the potential opportunities for next week. I'm seeing it in 2 symbols. We're always a bit cautious trading Mondays, but this is how it looks like. This is our 9-chart layout where we scan for potential patterns in these time frames: 1 minute, 5, 15. These are consecutive time frames up to the quarterly chart. It gives us a great overview. And this is basically what we're seeing here for the Dow Jones. The YM looks very bullish, right? These higher time frames, well, they're uptrending. Everybody can see that. What we have here, this is a daily S2 pattern, but it needs to re-break this important level. Well, that is the entry. This is where the stop goes. This is our test bar, and that is a bullish entry. We had another entry back here. I used this one to add on top of my position. This is here what I called out in the newsletter. It was, I think, in October last year. That's working nicely too. So we've got patterns after patterns, right? And patterns, this is an S1 within an overall S2. That's basically the best thing you can get because it builds energy, right, into the charts. If we've got an accumulation of patterns. Now here on the 5-minute, that looks quite nice too. This is an S1 in the making. We've got our base with swing touches, or we need a test bar, right? A test bar and a re-break, and then this could work out too on the 5-minute chart. Next is gold with opportunities. This is how it looks like, right? It has broken out, making an all-time high on the daily. Well, it could still rise a bit more, right, before it pulls back. And what we see here is, this is what we call a super trend here, a very strong and smooth trend. And a super trend allows us to trade system 3 in 1 time frame lower, 5-minute chart. So that's an S3 setup, needs to re-break the bar, or we've got as well, comes at the same time an S1 pattern on a 5-minute, needs to re-break the base. Okay, somebody writing me in the chat. Not sure what you mean, Liz. Okay, I've just allowed you in, yeah. Okay. So we've got YM with opportunities for next week and gold for continuation of this bull run, at least for these lower time frames, right? All right, so let's come now. Okay, this is my recommendations for the super cycle. I talked about that already during the first webinar. I'm not going to repeat it, but basically there are fantastic opportunities for traders. We've got strong trends, exponential trends. We've got increased volatility. That's a trader's dream, right? And that's what we're expecting for the next 10 years. And you can read it through in the recording I'm sending around. Now let's open it up for Q&As, and once we finish with the Q&As, we're coming to the package offer for the workshop that starts next week, Thursday. Okay, questions. Either you can type it in the chat, or you speak out, or once the webinar is over, well, you can always write me an email as well. Questions. Was it too fast, too confusing, or could you follow? Okay, Gianluca, good. Yeah.
Gabriel, someone has his hands up, Michael Grossbart.
Okay, Michael, yeah. You can unmute yourself. Michael?
Hi, Gabriel.
Yeah.
Accidentally put my hand up. I don't know how or why, but I don't have a question. but thanks. It's been interesting and easy to follow.
Okay, good. Okay, Kirk is asking in the chat, the hardest thing I see is how to know long or short on these patterns. Okay, I'll learn this week in the workshop. So yes, you're attending the workshop. Well, basically, we're looking at 3 consecutive time frames, and we want in the highest of these 3, we need a trend. In the mid frame, what we call it high frame, then in the mid frame, we need support from the 21 moving average, and in the low frame, we've got a pattern. S1 pattern or S2 pattern. System 3 works a bit differently. But we need a trend, right? And we need rules to be fulfilled in 3 time frames. Whatever is beyond these time frames give us swing potential, as we've seen with the stock on levels. Okay, Charles is asking, you're part of the workshop too, right? So you're asking about the measured move and the target time frame. Okay, yeah, we can do that here with a recent trade. Let's see. Let's just use one. Yeah, okay. Well, let's use this one. This is the pattern, right? And this is the measure. This is the momentum move. It starts here. That's the base. And that's the end of a momentum move. And this is the pattern. So they're connected, pattern and momentum move. So we basically, a measured move means that this move from base to the end, that's our pole, flag pole, right? We need to duplicate that pole. We put it here and we duplicate it. So basically the target is up here, right? This is the target. And the timing, what is the timing it took to develop? So in this case, from 10 a.m. to, well, 10 a.m. 20, so it's a 20-minute momentum move on a 15-second chart. And that's basically what we are expecting as a measured move. Well, let's see how that did. This was our measured move, right? And this is what it did. It did the measured move and more in this case. And we can see as well from here to here, this is the time it should take. Well, it's more or less the time it took to develop, right? So markets are fractal, and they're fractal as well with their momentum moves. This went further. Okay, but I mean, more of that in the workshop, obviously. So it's relatively easy. We don't want to overcomplicate it, right? We want to have it easy because trading becomes relatively complicated, right? Once you scratch on the surface, you want it to be easy when you start with, not complicated. Okay, Gianluca, your question is not about the charts, but about the community. Can you elaborate on the community aspect? Is there a moment you meet with other traders, a way to be involved at the beginning, pick up confidence, things are traded? Yeah. Okay, so I'm basically following my teaching is not only teaching a workshop and providing the rules. Well, it's about building on top of that, right? I'm providing group mentoring, and I'm building on top on the principles of deep practice using a simulator. So deep practice best is to grow in a group. It's a bit of a classroom style, a classroom type of thing. Everybody comes to the workshop, and those that want to continue mentoring, well, they remain in that group, right? And that's one of the key success factors, to have a strong group that grows together. And obviously, having a lot of groups by now, well, we have grown into a community, and those in the master's class, well, we meet once a month. Later today, we're going to meet and talk about ideal mental trading state and things like that. But basically, you want to grow right into this overall community, and it starts with a workshop with a smaller group of people, right, that become friends and support each other. Okay, Charles, is one able to trade the CRB index directly? Only the components products? I don't remember. I think I watched out for an ETF. I think there's no ETF on the CRB. I'm not trading the index, but you could definitely do it if there's an ETF. I don't remember. I trade the individual components because some of them are much better than others, right? this is it. Here, my mission is to develop successful, consistent trader talent within less than a year. It is possible. Well, it's my mission. It's a challenge for me. It shouldn't be your goal, right? For some of you, it will take shorter. The shortest time it took was 4 months of one of the futures traders. And it can take a year. It can take 1.5, 2 or 3 years. It depends a bit on how you're conditioned, right? In the end, once you have developed into a mature trader, well, it's all about psychology. And we talk quite a bit of psychology in our master's class community. My vision or our mission is to establish the world's trader hotbed number one in terms of producing trader talent.
Thank you, Gabriel.
Thank you,
I just
Ray.
want to thank you for all your teaching and teaching your system, sharing it with others, and all your mentorship. I really appreciate it. I wouldn't be where I am without your teaching. So really appreciate it.
Thank you, Ray. You find testimonials from Ray on my YouTube channel. Really, really good. We had an interview as well, right? Trader Chat interview, Ray. So
Yeah.
recommended watching. Thank you. Any other question? We've been quick today, less than an hour. Usually takes a bit more than an hour.
I think there's a question in the chat regarding the internet speed in South America.
Okay, Mike Bloom, yeah. John, internet speed is important for trading the shorter time frames, general anything under 15 minutes. This one, the higher the time.
One above from
Okay, somebody asked something. Okay, John Mitchell. Okay. Do you have suggestions for acceptable internet speeds that are suitable for trading? Well, I'm in South America part of the year. The local provider 7.8 megabits, right? Well, that's sufficient. 8, because we are not high frequency trading. That's sufficient. 8, absolutely, yeah. Okay, yeah, that's okay. Parts of the year, just came back from Greece. I'm 2 months of the year in Greece on a small island. Internet speed is like that. What you just, no, it's 10 download and 1 upload. It works fine. Yeah. More important is whether it's stable. Right. Okay. Did I miss any other? Oh, Ray has posted something. Okay. Okay, DBC ETF is an approximate for the CRB. Okay, I'll put that down and I will research that, the DBC. Okay. Okay, thank you, Elizabeth, for the positive feedback. Okay, Kip, thank you. Well, Kip has grown tremendously within a short time. Trader growth happens in big steps, right? Sometimes you consolidate in your growth and then you make a big step. Kip made a huge step forward. Thank you, Kip. Took you longer than a year, right? But you are full-time trading, full-time working as well. Online course. I'm working on offering an online course. I don't have an online course yet, Diane, but this workshop is live streamed, but it's recorded as well. And I'm going to provide the recordings for, I think, 6 weeks. You can watch the recording. So it's kind of an e-course if you so want. Okay, Holger, thank you. Thank you. You're a great student. Indian trader. Krishan Kumar. You mean if you're living in India, right? That's what you mean. Well, these future contracts we trade, like gold, crude, etc., interest rate futures. These are global contracts on the global platform of the CME. And the global platform, they have regional like centers around the world. It can be traded with very good execution speed and everything around the world. And these future contracts, these global contracts, they are traded nearly 24 hours a day. Well, they pause for an hour. They have to settle the day. but they're traded all over the world. And I have students like in the US, in Europe, in Asia, in Australia. These are completely different time zones. And each of those traders, most of them trade in their mornings. You can trade in the evening as well, but time doesn't matter, right? You can trade around the clock, whatever the time frame you trade. I hope that answers your question, Krishan. Okay, I had missed that question, huh? Okay, Sean. Hey, Sean. Thank you. Ray, yeah, the deep practice is a big thing. Thank you, Ray. Game changer. You're teaching your daughter with deep practice. Very good. Okay.
So that she can survive high school.
Yes.
It's so much more efficient and effective. It's amazing.
Yeah. We're going slow by breaking things down, and in the end, we are fast. Alan, you like the group, right? The group is a big edge. It's a key success factor. Yeah. Okay. All right. Thanks a lot. We're just completing the hour. Let's call it a webinar. Thank you. Take care. Hope to see you soon. Bye-bye.
Thank you. Bye, everyone.
Thank you. Ciao.